Hey everyone, Steve here from theturtlefollower.com. Tonight's video we're going to take a look at the XLV, the healthcare spider ETF. And basically you can see here that this is actually breaking out. It's led to a lot of the strength that we've seen lately. A lot of healthcare names are participating in this move, and you can see here that the healthcare ETF, the XLV, is actually in the process of breaking out. Okay, you can see it's hit some new highs after pulling back to its trend line, also breaking out of a consolidation pattern right through here. Okay, so it basically broke out, pulled back, retested. That retest happened to coincide directly with the trend line, almost through the 50-day moving average, and right now we're up to new highs. All right, so there's two schools of thought on this. You can definitely go ahead and buy the XLV and put your stop right down here under 71. High volume breakout, very viable trade. The other school of thought is you can take and look at the XLV and see which trades or which stocks in the XLV happen to be setting up the best, because obviously the XLV is comprised of, I don't know exactly how many, but there's a bunch of different equities that are in the XLV that make up the index or the ETF. Now, not every one of those equities or stocks are going to be breaking out to new highs. So what I do instead is, if I know that the XLV is breaking out to new highs, all right, and I want to look for healthcare names, I go to my 52-week high scan, and this is actually in my real real money account. The scans in Thinkorswim don't work in the paper money, so I'm in my real account and I have my scan for 52-week highs, and these are all the 52-week highs that hit today. There's probably about 50 52-week highs. All right, and what I can do is actually sort by sector, if I stop hitting it so many times, and actually then be able to see all the healthcare names, okay, that are in or hitting 52-week highs. All right, so then what I do is I say, all right, well, now I want to sort through these, okay, for argument's sake, 15 stocks, and see which ones are offering the best setups. And I've already highlighted 5 for you guys. First one, Thermo Fisher. Okay, you could see here breaking out to new highs after a nice long consolidation. All right, you can see it's also in an uptrend if you connect all these points together. All right, so if you wanted to take this trade, you could buy the breakout tomorrow's open and go ahead and set your stop right down here, 126. This isn't a momentum trade as we've put on in the past, because it's very close to the 50-day moving average. It's average, all right? It's very close to where a lot of traders like to take the position, usually around the 50-day moving average. All right, so this one is a little bit of a longer-term trade, and we'll go over that in a video this week. I had a couple comments back on some of the videos I did, and one comment was it was a little confusing between momentum and long term, so I'm definitely going to put a video together for that to go over it. But essentially, this one right at the 50-day moving average, you're using the 50-day as support, and you can set a stop there at 126. PKI, Perkin Elmer, don't know what it is. I have no idea, never heard of it, but ultimately breaking out to new highs. All right, you just got to watch here. You do have some resistance back here, but it looks like it's clearing all of that. But again, very similar setup, using the 50-day moving average as a support level. There's the consolidation that it's currently breaking out from. Your trend line is right along here, and your stop would go ahead and be placed right under this 45.50 level, okay? Because at that point, you would have a break of the trend line, a break of these lows of the consolidation, and a break of the 50-day moving average. Corp. Okay, these are all good trades that look like they're, any one of these can be classified as a good trade because they're all breaking out, they're all on higher volume, and they're all easily identifiable with the stop level. Okay, there's your setup there. Take the trade at 124.60, put your stop down there at 116. Again, a little bit of a longer term trade because you're using the 50-day moving average. Okay, much different than something like an Etna where you're clear well above the 50-day moving average. And if you switched over to a 21-day moving average, all right, the 21-day would be the supporting one. So much more of an advanced trend line, much more of an accelerated trend line, all right, but a different situation. This is one that I'm actually long in my momentum account because the 21-day has supported throughout the move. I'm not waiting for a move back to the 50-day. All right, so a couple different ways to play it. Here's another couple. I'm not going to draw on the chart just to, you can do that all. I might as well just do it, right? Regeneron Pharmaceuticals up 5% today. Okay, and again, a little bit of a longer term play. Trend line's a little bit shallower, right? Much more of a, kind of get in it and just slowly manage that stop level. But here you have a couple different options. Your one stop could be here at 406. Your other stop could be down here at 387, depending on how you want to size that position. And the last one, UNH, which is one that I'm going to try and get into tomorrow. I like this position a lot. Again, momentum-based trade. You can see it's well above the 50-day moving average. All right, so we'll switch over real quick to a 21-day. I don't know why I have this so small. All right, again, higher volume. You can see where the 50-day moving average is, right? All right, so the trade that I'm going to be placing tomorrow is in UNH. I'm going to be entering the position with a stop right here under 112.30. Call it 112. All right, you can see the trend line intact, the breaking out of consolidation on higher volume. But again, if we switch over to my momentum style, where we use the 8-day and the 21-day, okay, you could see right here, still the volume and everything's the same, but the difference now is look at the 21-day moving average and look at the support it's had in the stock. All right, you're starting to break out. 8-day, 21-day, 50-day was down here, if you recall, down here around 107. All right, so for this trade, it's a momentum-based trade because you're using the accelerated trend line. You're not waiting for it to retest the 50-day, which is a perfectly fine, support area. Instead, you're using a momentum. You're much smaller size position. All right, maybe you're risking a 1% on the trade, but look at how close your stop is. All right, so it's a much more aggressive position. And ultimately take the trade at 118.52 and you set your stop down here at 112, because at 112 you break the 8-day, you break the 21-day, and you break this accelerated trend. And most likely at that point, the trade's probably over. All right, when trades are over in momentum accounts, this is what happens. All right, I'm out of it. DuPont selling it tomorrow, out of the trade, broke down below all these positions, got a downgrade today. All right, it's time to leave. So I'm going to take a small loss in the trade, but these are big reward. I don't want to say high risk, but it's much more likely that you get stopped out of these trades. But when you find one that works, you can run it and get some nice size gains out of them. So definitely want to make sure you're sizing those positions properly. But anyway, if it's my money for myself, the trade is on UNH for a momentum account. If I could type it in and get my fingers to work, there's your trade, UNH, okay, momentum style, and there's your position. But again, any of these 5, TMO, PKI, WAT, REGN, and UNH, all 5 of those set up extremely well, and you could take any one of them at this point. So I hope you guys enjoyed that. Again, there's ways you can take it. You can very easily take a trade in the XLV. I personally think that we can do better. Think that we can go ahead and select the right stocks in a sector, and that's why I've picked out these 5 for you guys tonight. All right, any other questions, please leave them below. Make sure to head on over to the blog. I put on a new put up a new post about trading with full-time jobs. In case you guys don't know, that is something I do. I am not a full-time trader, unfortunately. I'm a landscape architect by day and trader by night. So a couple tips there for anyone who is looking to start trading. A couple tips on what I do and how I manage my positions. And if you want, you can go ahead and enter your email address at the bottom, and I will gladly send you a short video showing how I use alerts and how I use contingent orders to get around my busy schedule. So anyway, head on over there, check that out. Have a great rest of the night. Thanks for watching, and we'll see you later.